Okay. Ooh, I want to watch that one. The true story why he left. Bon Jovi. I've already done my scans. If you're watching this later, the reason I'm going to go right into stuff is because I've got to take Miss Penny to the veterinarian for some shots. Just routine shots. Nothing crazy. She needs a allergy shot and a coughing shot or something for boarding. But I'm going to run right into this. So I've already done the scans, everything. So I'm going to hit record because I got to be out of here by probably 8:30, 8:45. Good morning. It is Wednesday, May 8th, hump day. Hump, 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 hump. And there's a lot to go over because we have not hit what we thought we would hit on earnings. Earnings season is, so far, it's you better beat, you better get higher, or else we're going to punish you. But where did we finish the day yesterday? At 440 on the Qs. Not bad. You got confirmation. You've got a positive moving 9-day, positive moving 21-day. I think TrendSpider posted something. This is the first 821 cross up that's bullish, meaning the 8-day on the 21-day on a daily chart. You got the first bullish cross up in quite a while. So we've got the confirmation that we need. Are we going higher? It just doesn't seem very comfortable, but it never seems comfortable when you're this high. And again, with earnings, you better beat and guide higher or else the market is going to punish you at these levels. Now, Amazon. I wanted to bring up this one because Amazon introduced its first fleet of electric trucks in ocean freight. And I've said Amazon needs to hold the 188 point in order to continue higher. If it's going to go to 200, it needs to hold that 188. Where did we close yesterday? In the morning? The morning candle closed at 188.92. Did it hold it? No. It closed at 188. It closed at 188.78. That's hard for it to hold. Where is it right now? 187.50. We'll see where the next two candles hold. The RSI is extremely high on the 4-hour. It's at, it is at 65. This is a great company. This doesn't mean that you go out and you sell your Amazon at 188. No, if you want to trim it, then trim it. The catalyst is gone. The earnings are over. All you're going to get is news like this with the electric freight, things of that sort. You're going to get, some news. But you're not going to get, oh my God, we're going to make this amount of money. You're not going to get a reiterance of guidance. So make sure you are comfortable with the name at its all-time highs. And again, 188, tough to argue that it's going to shoot higher, but in all likelihood it will. So one that I wanted to point out, an interesting article yesterday, Interactive Brokers said, investors are pouring into Starbucks and sold Apple shares in the weekly moves. Interesting thing to look at because Apple, it's trying to hang on to that 180. It's at 182.70. They released new iPads yesterday. After earnings, it's just kind of positioning itself, just capitulating right there. If we look at the weekly, it's still high. It's still high. The MACD below the oscillator, the RSI 52. You're up well above your 200-day. You're just kind of crossing your 50-day again. We talked about this before. Every time the stock for the last 4 or 5 years has gotten below the 50-day, it's been a buying opportunity. Again, the 200 period moving average still moving positive. 50 still moving positive. It's shrunk a little bit down, but Apple is a good one. Now, when we look at Starbucks is a different kind of beast. Starbucks, They announced their earnings. It was a shit show, just an absolute shit show. Do you want to buy this one? No, right now you don't have confirmation. The algorithm loses you 19% on this one because you're still in from 85, 88. It just missed the earnings. It didn't get this downturn. It got you out with a 14% loss right there. Hasn't gotten you back in. It's oversold. They're pouring back in. Do you want to time this one? Probably not. I would say the $100 is still a good place for this stock, but you've got a new CEO who just hasn't done anything. So when you're looking to pour into these, if you're one of these people, you can read this article. I just don't think that you time it. Here comes the boom. This is an alpha pick, Sterling Infrastructure. If you want to read about it, remember, sign up for alpha picks. This is a portfolio that has returned 116% versus the S&P 33%. It is 2 data-driven stocks. Every month you get access to the portfolio when you get it. They release these types of analysis. Sterling Infrastructure reported they're up 16% after their earnings. This is a power. Here comes the boom. Sterling experienced strong growth, including 294 basis points expansion and 12% operating income. If you want to sign up for this, you absolutely should. And you should use my link tree, linktr.ee/daily stock pick, alpha picks right here. You save $50 off your yearly subscription. Join Alpha Picks. You get 2 data-driven stocks every month, alerts when to sell. So they'll tell you when to sell. Stock, they go over multiple sector, access to all the Alpha Picks on day one. How do you, if you're an Alpha Picks member, how do you go about this? Well, you go to Alpha Picks, and then you can go to here. And they've got 3 strategies. Buy at least 5 of the strong buys rated Alpha Picks from the existing portfolio. You can buy the entire portfolio. I think it's about 20-something stocks. Use Alpha Picks as an idea generation. But Alpha Picks continues to kill it. Absolutely kill it. Let's go over Uber. Because Uber did not do it's not doing very well in pre-market. It's down 5.93%. That's a little bit higher than where it actually tanked to. But Uber earnings per share, they lost 32 cents. They need to become consistently profitable. They lost more than expected. Let's go to Earnings Hub. Let's see. Earnings Hub right here. And we can click on Uber. Let's see if it's updated. Last time I checked, it wasn't updated, but it probably is. Yeah. There we go. They were expected to make 23 cents. Reported a loss of 32 cents. Now, that includes a write-down. So understand, that includes an enormous write-down. Their expected revenue was right in line. The CEO said the goal is to become consistently profitable, but since the last time it was the first time they were profitable, it's a little bit hard, especially with a write-down. Ridership is up. So you can read this article. Uber Technologies swings lower after gross bookings. Guidance disappoints. It was initially higher. It's all about gross bookings. And it disappointed by just a little bit. Remember, the stocks in this core portfolio, and this is Uber is part of the core portfolio. These are stocks that are good companies with good earnings, with good products, and good management. That's a recipe for good growth. And while Uber may trade down today, I do think it's a buying opportunity. Let's take a look at the chart. The algorithm, the algorithm on this one, we're just waiting for it to come up. It did get you back in at 68.40. So if you listen to the algorithm, you're not down by that much. Again, I think it's an $80 stock, at least a $70 stock. But it's at $66.30 right now. It got you in at 68.40. It probably will get you out over the next couple of candles with a little bit of a loss, 66.20. The algorithm makes you 63%. Buying and holding this one makes you 195%, 30 positions over 24 months. So how would I play this one? I would look for entries. I am a big believer that 61.48 is the support level for this one. I believe that's the ultimate downside support. I don't think Uber's going anywhere. Uber Eats made money. Lyft, has a better opportunity to make money because they were beaten down by so much. They don't have the eats portion. I do think that this one is a good buy on this bounce. So you can read these two articles, earnings per share, 32 cents. That just goes over the specifics. You can see Uber over here. You can read that article. You can go to Earnings Hub, and pretty soon they're going to have an AI summary of the earnings call that they go through. But look at the revenue. You can look at the revenue still going up. You can see the earnings per share. They missed. It is way down. This is what happens with growth companies. So I do think that one. Now let's go to the other one that is just horrific is Shopify. But when you look at Shopify, what'd they do? They beat by 17%. Okay? They beat revenue by 1.4%. We can look at Shopify right here. Earnings per share of 20 cents beats by 3 cents. Revenue beats by 10 million. What happened? It was the guidance that they guided in, quote, the high teens versus an expected 19%. That's the growth estimate. Okay. This is a company that is 100% valued on growth. That's any question about growth is going to kill this company. Any question about growth is going to kill the company. And that's what you want to see. Earnings preview, focus on growth durability. Will they continue to grow? Well, when they actually announce that, hey, we may not grow as much as we thought, that's going to kill the stock. The stock in pre-market down 17%. Yes, I am in this one. Yes, I bought at much higher prices than $63. I am down. Will I be getting out? Probably not. Again, this one, just like Uber, the algorithm makes you 60% versus buying and holding makes you 123%. You may ask, why in the world would I even trade on your 4-hour if it underperforms buy and hold? Well, the reason is sleep at night. Some of these stocks, if you want to sleep at night, you want to provide yourself a good opportunity to where you're not going to lose. Some people would be absolutely more comfortable making 60% and sleeping at night going, you know what? Yes, I missed out on 123%. I want the average win of 10%. I want the average win of 10%. Let's see. This one right here at 72, if we look, this was up at about 7, maybe 8%. And then it pulled back. So if you didn't feel comfortable holding through earnings, and you were right, it was 4 days, almost 5 days, you were holding for that, you had a nice 7% gain. A nice 7% gain. So again, the algorithm is there to provide you to take some emotion out of the trade. It's not there to absolutely 100% kill the actual buy and hold on every stock. It is a guide to help you make decisions. I don't trade it on a bot. I wish I had an algorithm that I would trust trading on a bot, but past performance doesn't indicate future performance. So, we've got this gap up here on Shop between 83 and 89. I do think that is filled. I think this is a buying opportunity on this dip. I think the consumer will continue to be stretched, but I think Shopify is one that will make that turn. So go read about Shopify. If we look at the biggest stock movers today, we can see Lyft gain more than 6%, better than expected earnings. That's way different than Uber. Again, Uber rose yesterday, probably on the Lyft stuff. Reddit, which was a new IPO, they jumped 16% after revenue growth of 48%. I'm still not investing in Reddit, RDDT. It just doesn't have enough candles for me to feel comfortable to know where this stock is going. You can trade it. You can trade it all you want on a 5-minute, on a 65-minute. We can look at the 65-minute algorithm that I give you when you sign up for TrendSpider. The 65-minute makes you 6.6%. If you bought and held, for 47 days, you're only up 3%. So this is 17 positions over 47 days. So you're not trading quite one per day. You've got this gap up here between 54 and 56. Maybe you hit it. It's got confirmation. In pre-market, you're at 53. Probably not a bad thing to think that you're going to go to 58 and cover that gap. But do I want to do this? No, I don't. And the reason is it's an IPO. And I just don't trust IPOs. But I'm different than you. Arista, we went over yesterday. They gained more than 7% on its upbeat Q1 guidance. I went over that I really like this company. ANET is the symbol. And this one may become a core portfolio winner. I really, really like this name. This is one they reported in pre-market. They are at 293. It is covering this gap. We went over how gaps really are something of a magnet. This gap up here, it's covering that gap. That's what it's covering. So if you bought down here at 256 and you said, you know what, the algorithm's great. I really like it. I like the comfort that it provides me. This trading range that it's been in for a while, I think it's going to explode up there. Well, it exploded up there on earnings. So if you listen, ANET is a good one. And again, that's one of the biggest winners. If we go and we look at ANET on the quant, you can see it's a hold as far as the quant goes. Wall Street has it as a buy. You can take a look at their earnings right there on Seeking Alpha. You've got a $299 Wall Street target. That's 9% up. What's the problem holding it back? Well, it's valuation. It's still, we went over the gap, the PEG ratio. It's still a little bit high. It's nothing horrible. It's trading right in line. But again, ANET, it's one of the winners of today. Let's go back to the biggest movers of today. The biggest losers, Twilio. Twilio dropped 8% despite beating Q1 results. The company expects Q2 revenue to range between 1.05 and 1.06, which is below consensus estimate of 1.08. Again, let this be a guide for you on earnings. When you're playing earnings, and specifically in this time of uncertainty, because we're at highs, you better beat, you better guide higher, or else your stock will be hit. There better be all good news. And I said that if you go to Substack.com or you have the app, go and look at a chat about, God, I forget which stock it was. It's one of those rocket stocks, Rocket Labs, I think it is. But go and look at that discussion that I had. There's a great thesis that one of the listeners posted about exactly, hey, Rocket Labs may go up because of this story, because of this this movie that's coming out, because of this. Everything like that is priced into the market. The only thing that's not priced into the market are surprises. But everything about releases of movies, anything that you read in the news about something, it's priced into the market. I always say it. What your grandmother is making for dinner for Christmas, it's already priced into the market. So take a look at that on Substack. I really liked it. I enjoyed it, but I didn't go over it per se. Let's see. Things that I have. Affirm killed it. Affirm killed it. When we go over to here to the hub here, earnings hub. Let's type in Affirm. AFRM is the symbol. Affirm is a buy now, pay later. They killed it. They 37% beat, 4.87% beat, and they got it higher. So again, you want companies that are guiding higher. This is a company that's not making money. It's not one that I'm putting money into. They're up 4% in pre-market. Where are they? 36.50. Where are they going to? Well, they might be going up to that 200-day. That 50 days moving a little positive. This isn't a horribly expensive one when you look at the 4-hour. When you look at the weekly, it's just kind of put in its its place here. Where are you going? You may be going to 49 or 50. I mean, again, that 50 days moving positive. You don't have a 200-day. I don't like this stock. I don't like this company. I don't use buy now, pay later. But they killed it. They absolutely killed it. Ones I find interesting today. Okay, we can go to Earnings Hub and we can look at these, and you can look at these in Seeking Alpha. ARM is an IPO. ARM is one of these semiconductor kind of stocks. They use the their platform for building any chips. So ARM is one that's going to consistently have good revenues, but it's extremely expensive. If we go over here and we look at, let me do ARM, and we look at ARM Holdings, we can see, we'll go over to summary. Let's look at the summary because I want to show you where the valuation really gets killed. And you can see the quant doesn't cover it, but you can see Wall Street, it's a buy. Wall Street says it's a buy. Average price target, 111. You're trading at 107. They have earnings after today. When you look at the valuation and you go this, they don't have a lot of guidance per se, but when you look at the PEG ratio, it's up above the sector median. When you look at the PE, it's up above the sector median. When you look at the PE trailing gap trailing 12 months, wow, it's 4,000% above the sector median. So I just want to make sure that you know it is expensive. Doesn't mean you can't trade it. You know, the algorithm makes you 93%. Buying and holding makes you 93%. It's the exact same thing. Over 7 months, got you in at 101. You're only trading at 107. Do you have a bounce up? Well, that 50 days moving negative. The 200 days still moving positive. Your RSI is at, let's see, trending down at 56. So ARM is an interesting one. If you want to go to Earnings Hub and you want to take a look at ARM, this one right here, dog's crying. I'm going to ignore her. ARM reports record revenues from the last time. That was their first time. They beat it by 16%. Now that's 30 cents. They're expected 30 cents. They reported 29 cents last time. They were expected to grow their revenue. Again, this is their second earnings report. If they don't hit, you're going to get killed. That's why it's not in the core portfolio. Airbnb, I constantly use this product. They are expected to make 22 cents. Last time they beat by 18.75 and they made 76 cents. That's lowered estimates. I don't know enough about the lowered estimates to say, yeah, this is a good opportunity to get in here. If we go to Airbnb here, I think it's a hold in the quant. Yeah, it's the valuation. That's killing it. Everything else, it's fantastic. The valuation's killing it. The valuation is super, super high. So again, you have to guide higher. One that I really like is HubSpot. When we look at this chart, I'll go over to TrendSpider and look at the chart. Last time they beat by 14% at $1.76. Again, lowered estimates, but they're expected to grow a little bit. HubSpot is one that you want to take a look at because HubSpot, if we go over here, we can see the valuation is what's bringing it down. But with growth, you want it. Now, Seeking Alpha analysts are saying sell, and I don't know why. You can go over here and read why they're saying sell. Michael Wiggins, Amrita Roy, sell. Too expensive. All of these are good things to read if you want to invest in these. When we go and look at the chart on HubSpot, I will show you the weekly chart. This has been a killer stock. Absolute killer. Buying and holding over 2 years, you make 84%. You just had your golden cross. You're using the 200-day as your support. Again, it's expensive, but I like this stock. Another one, let's take a look at the chart of this one. The trading desk. This is a pandemic huge winner. Huge. Has it done well over recent time? No. 100%. If you held this for 24 months, you're up 100%. So it's a very, very good stock. When we go back to the pandemic, you can see this one's still growing. Look at how it tanked and look at how it's going up. It hasn't reached its all-time highs of 114. It's trading at 90. Well, do you want to invest in it? Let's go to Earnings Hub and let's look at the trading desk right here. Their estimates, they missed last time by 4.65%, but they've still grown the stock. That was 41 cents. They're expected to report 21 cents, 480 million. They're expected to actually reduce. So what's the stock been doing? Well, if we go to the 4-hour algorithm and we look at a short term, it's been bouncing around. Do I want to trade this one on that strength? Probably not. The RSI is at 63. I don't feel comfortable with it, but maybe you do. If we go to the trading desk over here on Seeking Alpha, You can see the valuation is what's bringing it down. It's a hold on the quant. And the PEG ratio, it's a little bit high. Not super high, but it is a little bit high. So you want to take a look at that one. Now, let's take a look at a thorn in my side. We can take a look at Sedge. Sedge here has an expected loss of $1.57. They reported a $1.92 loss. That was a 30% beat. Did they get benefit from that? I don't think so. Because, again, this is a solar company that should be making money. But take a look at that. It's upper left to lower right. Do you want to invest in this one? I don't think so. That would be, for me, that would be a stay away from. Now, one that I do think, I've held this one. I've traded it before. IONQ, I think I bought 2 shares at like $5. I think I sold them at like $9 or $10. This is, again, upper left to lower right. This is one that you want to be careful with. It's not making money. They report after the bell. And we can go over here and we can look at IONQ. This is a meme trader. These are people that think, oh my God, it's going to make a ton of money. Well, if they do, this one's going to shoot up. They're expected to lose 25 cents. They lost 20 cents last time. They're expected to increase revenues by $7 million. This stock will go up even if they lose money. If they hit that revenue goal, the stock will go up even though they lose money. But in this environment, you better have good earnings. You better meet that 25-cent loss. If you don't, say you get a 30-cent loss, but you meet revenues, you're going to get killed. Say you guide a little bit lower, you're going to lose more money. You're going to get killed. So do you want to take that chance? Probably not. I would say no. Let's see. Duolingo is another one that I get a lot of questions on. In fact, there is this is social request, Duolingo. I forget who asked for it. But here you go. Let's go to Duolingo. This is one of their favorites, I think. Let me see. Let's close that and open it up again because it said there was an error. Sorry, there was an error rendering this component. I guess it's the chart that's not rendering. But they're expected to have 27 cents. They had 26 cents last time. They beat by 52%. They ain't going to beat by 52% this time. 1.95% expected on that one. We can go and look at the stock chart. Duolingo, DUOL. And I would suggest if you want more information on this stock, you can check out the Stock Market Nerd, Bradley Freeman, or just go to, we'll go over to Seeking Alpha. Now, this one, a lot of strength. Didn't have the death cross. Looks like the 50-day bounced right off the 200-day. You're going into this with strength. You didn't cover this gap down on the earnings. Boy, you shot up after that earnings. You're just up to probably about the highs where you were after the last earnings, after they beat by 50%. Do you think it's going to beat by 50% this time? I don't know. But this is a great long-term stock chart. That 50-day is still moving positive. You're still super high on this one. I just, for me, I don't think it's worth the risk. If we go over here, I tell you what, it's going to be the valuation that pushes it. Yeah. But again, a lot of stocks don't trade necessarily on valuation. They trade on the momentum. They trade on the growth. All of those are really good for this stock. So if you want to take a shot at it, yeah, I would say take a shot at it. Bradley Freeman goes over all of the fundamentals. If you want to look at the preview of it, go ahead. Now, Roblox reports tomorrow morning. This is a core portfolio stock. Remember, core portfolio stocks are there for you to trade during earnings, even if you're down 16% like Shopify. I do expect that if you wanted to hold on to that for a long-term trade, you could absolutely hold on to it, and I believe it will come back. Doesn't mean that 16% doesn't hurt. Doesn't mean that you shouldn't dollar cost average. Doesn't mean that in your retirement account, if you need cash, you shouldn't sell it for a loss. But that's all your decision. Again, everybody has different levels of actual tolerance. But yeah, 53 cents. Roblox is expected to lose 53 cents. That's higher than they reported last time. Revenue, $931 million. That is lower than they reported last time. We can go over to Roblox here. I think it's a sell if you want to be honest. It's a hold. And look, their stuff is not very good. The one reason I have it in the core portfolio is I say you can buy it under 40 and sell it over 40. Would I want to be holding this one at $40.18 going into earnings? No. Would I want to rebuy it if it goes to 44 and pops because of some crazy good earnings? Probably. The top of this range goes to 47. If we go to 50, do I want to buy it at 50? No. There's no reason to go to 50. Look at this long-term channel. So learn how to play these games. And yes, you're not going to win all the time. You will lose plenty of times. But the goal is to pick those companies that even if you lose, you could dollar cost average. Roblox, not one you want to dollar cost average. It could go lower. It's losing money. Sedge, not one you want to dollar cost average. It's losing money. IONQ, not one you want to dollar cost average. It's losing money. Now, one that I do like that is a recent alpha pick. Remember, we talked about alpha picks at the beginning. GCT. I just put more money into this at $40, around $40. It's trading at $39.51. They report tomorrow before the bell. The RSI, a little bit high at 65. You're trading at $40. Would I suggest you buying this at $40? No. The reason I bought this at $40 is because I did buy it when Alpha Picks picked it at about $31. Now, me buying it $40 just means that I believe in the long-term growth of this company. If you want to read more about GCT, you can just pick up Alpha Picks. You can pick up Alpha Picks and look at this Alpha Pick. Bulk up your portfolio, GCT. You can read that article. And if you don't want Alpha Picks, get Seeking Alpha Premium and just go to GCT. And you can read all of the analysis that's there from the people. You can read all of this stuff. Steve Kress even wrote an article about GCT back on April 17th. It's a strong buy. Now it's ranked 1 out of 5. Now the valuation, I'll point out, the valuation is bad. It's got a D, but the PEG ratio, which is Steve's favorite, it's trading well below the PEG ratio. I believe in this one. This is a Giga Cloud technology. Cloud, I mean, it's everything that you want to read, but you can read what provides end-to-end B2B e-commerce solutions for large parcel merchandise in the United States. They went and visited the warehouse. Again, Alpha Picks is the great one. If you want Seeking Alpha Premium, you get $50 off. That's 20%. Right here, just click on the link tree, 20% off. You can read all about GCT. Now, we can go over here to Earnings Hub and we can check out GCT. Where are they expected? Well, they beat last time by 50%, 87 cents. Are they going to beat by 50% again? I probably think not. The revenue beat by 9%, reported to $444 million. They're expected to have below that. So the reason I bought at 40 is because I believe them to be guiding higher. The valuation is a little bit crazy on this one. When we look at the valuation on a PE basis, it's trading right there. I mean, you know, the sector median on the non-GAAP and stuff like that, yeah, it's right there. This is a small cap name. It's nothing that's huge. It does have some retail behind it, but look at that growth. Over 1 year, you're up 662%. Would I expect that over the next year? No. Is it possible? Yes. But GCT, look at the 50-day kind of leveling off, still moving positive, kind of leveling off, 200-day moving positive. If we go and we look at the weekly, it's a little bit stretched. Look at how high that MACD is. The RSI is at 64. Are we putting in a nice leg to move higher? I think so. Again, the 50 days moving higher on the weekly. We don't have a 200-day. Look at the volume is picking up. I like this one. So I liked it. A stock that just reported that I like. I've been hearing a lot about this one. Vistra Corp. Now, Vistra Corp, you might ask, what is it? It's power. They just joined the S&P. Vistra Corp is, together with its subsidiary, operates and integrates retail electricity and power generation company. The company operates through 6 segments: retail, Texas, East, West, Sunset, and asset closure. It retails electricity and natural gas to be residential, commercial, and industrial consumers. Now, has it run too much? Look at that. It's up 249% in 1 year. Okay. Year to date, it's up 112%. It just got added to the S&P. It just had very good earnings. It's down 4.5%. We can go over and we can look at the Wall Street estimates. We can see there's 12 analysts covering it. There is currently a $77 price target. It is trading at 78. So more than likely, this is just coming back down to reality. It was overpriced. Again, this is how you use Seeking Alpha. Look at the price target to the actual price. This is over 5 years. You can see most recently, it's just been hugging that. It hasn't been below it. You want to buy it when it's below it. So VST, I do think, and my belief is power. Let me look at my stuff. Oh, I want to put this in. Because it's joining the S&P is not always something that's great for a stock. Look at Tesla after getting added to the S&P. That is down by like 40-50% since then. Look at SMCI most recently. That was added to the S&P at 1,000. Right now, SMCI is at 800, 20%. So it's not something that you want is automatically a great thing for a stock. What is good for a stock, and what I do think is, as we move towards AI, I've said it, it's an AI and a GLP-1 market. Those are two things that are super, super strong in this economy. This is the power to drive AI. Simple as that. You want to start, Powell Electric and some of the other electric companies that are in Alpha Pic's portfolio, they've gotten the kind of, thought process of, hey, somebody's going to need to power all this AI. So I like this Vistra Corp. I'm not adding it to the Corp portfolio. I do like it. It's a hold in the quant, and the reason is that valuation. The valuation is where it's at. PEG, you can see, it's trading slightly above the PEG, about 10% up. But all of the other stuff in here is good. It's just a hold in the quant. And if we look at the history of the quant, we can see it has been a strong buy before at 71, and you're trading at 81. It has been a strong buy here at 31. So if you got in here on the quant at 31, 30, boy, you're loving life at this one. Again, the quant is just such a good story. Now, I would say also, don't sleep on Royal Caribbean. They're hiring thousands of people to keep up with the cruise demand. Royal Caribbean is an Alpha Pick stock. It's an Alpha Pick stock. If we go and we look at it in the 4-hour algorithm, and we look at this was an Alpha Pick, I believe, in January sometime. I don't have it on the chart as picked. It was a buy here at 129 right before earnings. What has it done? It's up at 141. The algorithm makes you 63%. Buying and holding this one makes you 124%. Your average win in the algorithm is 20%. You have over 24.3 months. You have 30 positions. So just over once per month, maybe 1.5 times per month. Again, the algorithm got you in at 129. Now, if we take a look at a weekly, a long term of this one, you're coming up to the valuation that you were pre-pandemic. Pre-pandemic, this was a $139 stock. It's gotten back there. Do we expect it to grow? Yes. Demand for cruises, again, they're hiring thousands of workers. The demand for cruises, is Royal Caribbean a crazy valuation? No, if we go and look at Royal Caribbean right now, pre-market, it's up 0.08. I think this is a buying opportunity. Look at the valuation. It's a C. Okay, the reason it's a C is because the PEG ratio, if we look at that PEG ratio, it's trading 21% below the sector. The sector is hotels, resorts, and cruise lines. This is number 3 out of 37. What's number 1? Trip.com. They just reported earnings, and they announced that, hey, nobody's taking them over. There is no, I think this was Trip.com. No, maybe it's not. Maybe they didn't report earnings. Yeah, I guess they didn't. It was something else. Some other one. Dispar. But this one, I mean, that's the number one. If you want to look at growth and stuff like that, this is how you use Seeking Alpha Premium. Interesting thing for people looking at oil. Biden administration set to resume purchase of a strategic oil reserve. The last time they did this, they announced a lower buy, but oil spiked and they had to cancel it. This, I think, was important because they're looking at $79 now. $79 is the bid that they've put out to refill these strategic oil reserves. If you look at crude oil, it's trading at 77. It's down. So somebody's going to sell them through 300 million barrels, something like that, at $79. Thought that was interesting. How do you want to trade that one? Well, you can trade it on UCO, SCO. UCO is one that, you can use the 4-hour algorithm. You can use the 65-minute algorithm. You can see this one's all over the place. We don't have confirmation on oil right now in pre-market. You're at $30.50. I haven't traded this one in a while, to be perfectly honest with you, but I thought that was interesting. Sam Onesto, Palantir, from Spotify, wants to know about Palantir. Palantir is a $25 stock. I said it yesterday in the newsletter. So if you don't have the newsletter, read the newsletter. The newsletter is 100% free. Read it. I put in there a complete look at Palantir, why they dropped on earnings, what I think about the stock. Let's scroll down here. Man, $25 is resistance, and it will turn into support. At some point in time, it will turn into support. It was a great quarter. $25 has historically been a resistance level. The stock will get back there, so take the pullback as a buying opportunity. Simple as that. It's in the core portfolio. I do think that $25, you've gotten it. Now, would I buy it today? No. I mean, am I putting a position in here today? No, because it could come down here to 17. You want to buy it at 17? I'm not buying it today because the algorithm doesn't tell me to. Now, the algorithm only makes you 23%. You may say, oh my God, 23% for 28 positions over 28 months? That's pretty good. I'd like to get that. Well, if you bought and held this, you've made 190%. So I'm looking at the algorithm as providing me an opportunity to get in. It doesn't tell me to get in right now. 2202 was the last buy, but you've got a weakness here in the 9-day. You got weakness here in the 50-day. You got weakness here in the 21-day. All of those are weak. You have no confirmation. Now, the only confirmation that you have is that the RSI is at 42. It's low. Every time that this RSI has been low, it's been shot up. So I think you'll have another chance to buy it. Still from Spotify, I've been doing doing really well in Zeta Global. Is a long-term hold. Let's look. Zeta Global, I have no idea what this stock does. But you have been doing well. Killed it on earnings. Let's see what Zeta is. Zeta Global Holdings. Let's see what they are. Software technology. They're losing $170 million. Looks like they have less than $170 million cash on hand. But it does look like the earnings were good. Insiders not necessarily doing anything. Let's see Zeta here. If it's followed in the quant, I can get a better idea. It's a strong buy. So, hey, quant says strong buy. Profitability is the only thing that's down. And look at that. Gross profit margin, that's great gross profit margin. Even a margin sucks. Again, they're losing money. So, I mean, whether you want to hold it or not, I know nothing about the stock. The algorithm makes you 1%. Buying and holding makes you 98%. I'd just buy and hold it. I'd look for entries and I'd buy and hold. I know nothing about the stock other than its software. I'd be a little bit worried that it's not making money, but quant says strong buy. Can't argue with it. So still, if you've been doing really well in that one and you know something about it, I say have at it, hold on to it, continue doing it. When we look at the weekly of this one, you're at all-time highs. I mean, that's always dangerous to think that, oh my God, we're always going to all-time highs. It's dangerous, but again, you have to do more research on that one. Jackson from Instagram. Hey, Gary, I have another trade for you. Stock is Wing. It's Wingstop. This is interesting. I think I brought up Wing on my paid newsletter. It's in a rally that puts some AI companies to shame, and it really is. Honestly, it is. Full disclosure, I bought a put on it prior to earnings, which I'm already way down on. I know options are risky, and for me, it's a losing strategy, but I did open a Webull account just to trade short term. Webull's great. If you want a Webull account, I love the Webull app. And like Jackson said, they make it super simple. Join Webull, get 75 free stocks. Click on that link on my link tree. Let's see. Anyhow, I thought this was a fun one to look at. Thanks in advance. Honestly, it still has a bull flag pattern that might keep it running, such high PE. So I'm hoping we see investors less appetite for its lofty valuation or bird flu. I said this, and I think I put this in my newsletter. I said the support is 345, and I said down here at 364, that was probably not a bad place to buy. Now, if you look at chicken, Chipotle killed it. Wingstop killed it. Everybody with chicken as a main protein item has killed it. Popeyes killed it. There were some others with chicken, killed it. Even McDonald's with their chicken nuggets. Chicken nuggets killed it. So if you look at specifically with chicken, I think you're onto something. Now, wings, these are lower end consumers. Probably a good thing. The RSI up here, the algorithm makes you 208%. Buying and holding makes you 402%. That's over 24 months, 26 position. Got you in at 364. You're trading at 397. Your catalyst is out of the bag. The earnings are out. If we go and we look at the quant, let's look at Wing. This has just been a killer stock, and they've been doing a really good job of cutting costs and increasing prices. They have not seen any inflation on this one. Now, the valuation is an F. Again, PEG, they're 563% above their trailing 12 months. Forward, they are 268%. So they better keep growing. They better keep growing. Everything else is an A except for valuation, which is an absolute F. Seeking Alpha analysts, they say sell. Okay, you can see 3 authors in the last 90 days, but it's an overall sell. Wall Street says buy, and it's been a buy all the way since 175. Now, the price target is 385. You're trading at 395 right now, but it's been a buy this whole time. Now, when we look at the quant, it's a hold. Has this ever been a buy? No, it's been a hold for a very long time, and the quant has gotten it wrong. And the quant has gotten it wrong based on that valuation. Again, we talked about it. Some stocks just don't trade with valuation. So you want to take a look at this one. Jackson, I think it's perfect. And I did include the chart in my earnings for this week or last week. I forget which one. But that 345 does seem to provide you some pretty good support. So if I would put an alert, what I would do is if you have Seeking Alpha Premium, you can put an alert in there for 345. If you put an alert and it hits 345, you want to take that trade, because I do think that at some point the valuation brings this one down. And if it brings it down to 345, that's great. If you have TrendSpider and you don't have Seeking Alpha Premium, go and put an alert at 345. You can just put that right there and then create an alert. Create an alert at this line. Simple as that. It's easy. Daily stat. Let's see. Charlie from the private Facebook group. What do you think about Netflix and Disney? Disney is tanking after beating earnings. Will it make a comeback like Meta and Netflix are doing after tanking on earnings? So I said Netflix was a buy after they tanked. I said Netflix, when you had those earnings, I said it's going to come up here and fill that gap. You want to buy it. $5.49 was the buy, Charlie. I mean, honest to God, is there anything more clear that this company has pricing power, that they are the number one streamer, that they are making money? Yes, they're going to spend more money, but who's getting rid of their Netflix subscription? You may disconnect for a month or two, but you're coming back and they're not playing the game. Now, I've said it before. This is the all-time high at 700. It's going back there. 606, not a bad price. When you go over to Seeking Alpha and we go to Netflix, I'm looking at the time because I got to leave at about 9 o'clock. When we look at it, it's a hold and it's the valuation. But I just pointed out how Wingstop doesn't trade on the valuation. Now, when you look at this, the growth, it's not crazy. Yes, the only reason they went down last time was because they said next year they're not going to report subscriber counts. That's a big move. Remember, Apple did that with the iPhones. They didn't include specific iPhone sales. So again, I don't think that meant that this stock was hurt. I just think that was an opportunity to buy. You use the 200-day as support. If we look at the weekly on this one, it's still strong. It's still strong. So do I think you should buy here? I think it's going to 700. I bought more at 550. I think that's a good one. Disney's a different story. Disney's earnings, they said, hey, we may have, there was key wording in Disney's thing. And I do think that they killed earnings. But what they said was we're seeing the post-pandemic travel bug in our parks waning a little. That's going to bring it down. And I do think that you see it come down under 100 again. So this is a company that you want to buy. Again, the algorithm makes you 19% over 24 months. You lose 3% if you bought and held this one, so you don't want to buy and hold. But if you do want to buy and hold, I do think that this company is a long-term winner. Right now, it's just a valuation. Hulu and everything else, they made money on that. If you pull out some of their if you pull out their cricket rights in India, then their streaming business killed it. But the cricket rights were a killer. So I do think that Disney is going to come back. I do think that Disney is going to come back, but it might be a long slog. I mean, take a look at this one. This is the 200-day right here at 125. You've kind of leveled off. The 50-day is still moving positive. Even with that negative, the 50-day is still moving positive. Your RSI, a little bit, coming off the overbought. It's at 50. The MACD above the oscillator, nothing really to worry about. If you're sitting in this one in a brokerage account, I would not trade out of it. I would simply dollar cost average it. I do think that 153 up here provides the ultimate resistance level. And I think it will trade up to that. I think it's a buying opportunity. Again, this is a iconic. The problem they've had is there's no succession plan. And when Iger has handed it off the last time, he just did a horrible job. And they haven't identified a successor. Does that kill it? No. Does it make it hard to actually invest in it? Yeah, because Iger doesn't want to be in there. So that's what you have to kind of look at, Charlie. I am simply holding this one. Salah from Spotify. He said, what do you think about Duolingo? We went over Duolingo. I'm a fan of the stock. I don't know much about it. Bradley Freeman knows way more than I know about it. The algorithm, 204.46. I mean, that was a solid buy before earnings. I think you've got expected earnings that are pretty high. And again, in this market, you better beat, you better guide higher, and you better have good commentary. Because if you don't, the market will take you down. Shopify is down 20%, not because of their earnings. It's because of their guidance on the growth. The growth was the key. And when they said, yeah, we're going to grow high teens. Well, the market expected them to grow at 19%. High teens isn't exactly 19%. It's getting killed at 20% down. It's at 61. Just to give you an idea of where 61 is on this chart, it's down here. You've covered this gap. This gap that was uncovered between 62.31 and 64, it's covered. You haven't covered this gap between 48 and 55. Do I think we'll get down there? I don't think so. Is it possible? Yes. Will I add more? Probably. I think this gap up here is more likely to get filled in a good economy. And I do think when rates get cut, it's a supercharger for this economy. And I don't think that I'm in the belief that we get at least one cut. And I think it comes in July this year. I think they're going to pass in June, and I think you're going to see the market pull back a little bit, but I think they're going to cut in July. They are dying to cut, and it's an election year. They don't want to look political, and they don't want to cut in October when, boom, they're going to, they know that the market will absolutely take off, and it will go to all-time highs when they cut. That's what the market is expecting. Now, the Q's down 0.5%, but there are a lot of red stocks right now, a lot of red. Scans, I got a ton of them. Core portfolio, Bank of America. This got to cross up. Do you want to buy it? Well, here, Bank of America, $37.98. Algorithm makes you 31% over 24 months. 27 positions, so just once a month. What do you get if you buy and hold? 4%. So I think you do want to buy at $37.98. Now, is that an all-time high? No. No. Look at the weekly. Your 200-day has turned to support. 34 is your support. Okay, if you come down here, 34 is your support. That's where you want to put your stop loss. United Health. We've talked about United Health. I think I've said it before, it's a $500 company, and I've put that $500 in there. I put this $450 as the support level. $500 is where your 200-day is at. Your 50-day has started to move positive. Again, this one, they've been in the news for their cyber breach, but this one, clear point. Look at that $450. You hit it once, you hit it twice, you hit it 3 times. Boy, you hit it 4 times now, and you were rewarded with a 10% gain. It's a solid play. Now, United Health on the 4-hour, it doesn't really work. I say it before. Roblox, United Health, I think this one's $500. And I think when you get to 501, you sell it. I am completely out of this one. Full disclosure. I got out at about $550. I did not rebuy it at $460. And the reason was because of the cyber breach. Now, Target. We talked about Target a while ago. I think it's a $170 stock. We have that line up there at 171. I think it's a $170 stock. And I said it before. It didn't hold 170. So until it holds 170 is your resistance. Look at it. I mean, again, if you get TrendSpider, it doesn't take a genius to look at this chart and say, where have we gone up to? 3-4 times. Remember, when you're drawing a line, it's 3 touches, at least 3. The more than 3, the more confirmation you get that that's where it's going. Where are we going now? Well, look, the RSI, the MACD on the weekly is crossing down. Do you want to get in here at 500? I would say no. The algorithm loses you 7%. Now, buying and holding on Target over 2 years loses you 28%. So at least you're losing less. Do I want to actually buy this one? I would say no. And the reason I would say no is because I don't see any support down here at 160. I would say 154, 155 is probably better. But their earnings are coming up on May 21st. I would expect this one to provide good earnings. Again, it's more about inventories with Target. This one was taken out of the core portfolio, and the reason wasn't because they had horrible anything other than horrible management. Horrible management. I stopped going to Target. That's why I took it out of the core portfolio. But Target is one that we got in there. GLBE, which is Global E Online. This one got a cross up. I think this is part of the watch list from Motley Fool or from Seeking Alpha Picks. I do include those in the TrendSpider watch list. So if you sign up for TrendSpider, by the way, TrendSpider is having a killer sale. A killer sale. Get 6 months free. You pay for 6 months, you get 6 months. So 12 months, it's $582. $48 a month. If you can't make $48 a month using the 4-hour algorithm, you're crazy. I mean, I make way more money than I pay for these tools. And we talked about it yesterday, how like $700 can get you Seeking Alpha Premium and TrendSpider. And honestly, that's all you need. If you want a little more help with analysis, if you want a little more help at how to look at stocks, if you want more ideas, then you get Alpha Picks and you're at $1,000. $1,000 for the year. But I guarantee you that if you have any sense of technical ability and fundamentals, if you continue to just look at that quant and you look at those things and you say, yes, I use this stock. Yes, I'm going on a ton of cruises. Yes, I love Royal Caribbean. Yes, I'm going to buy it. Yes, I use cloud e-commerce. Yeah, GCT, I'm going to buy it. I'm going to do a little bit more research. But this one, GEB. Now, ELF. I am in Ulta. And the beauty sector has been taking a hit. And it's a pretty big hit. This one's down at 163. Now, the algorithm makes you 297% over 2 years. In ELF, you've made 622%. Your average win is 19.58%. You had the death cross here. Would I get into this one? I would say no. I would say this may be your average. Your average loss is 6.15. So again, you're risking 6% to get 19%. And you're winning 58% of the time. You're winning 58% of the time. So do I want to take this one? If we put a little line here, if you just take this line and you say, okay, see how this one hit the top there? Let's just put a line there. Okay, that's right where we're at. See that resistance right there? Well, old resistance becomes new support. That resistance was hit and then you broke through it. And then it became support. So right now you're seeing this one being support, but you just had a death cross. I wouldn't take the chance, even though the algorithm says you should. Again, emotion out of this. I don't wear makeup. So do I want to take this one? No. I'm getting killed in Ulta, but do I want to take this one? No. One that I've been saying for a while is a $50 stock, Cisco. You make a little bit in this one. It's not a great looking stock chart. There's a 50-day bounced off there, but Cisco, I like this gap to be filled at some point. I think it's a $53 stock. I think the valuation of this one is perfectly fine. Let me just hold on one second. Simon Property Group. We're going to go back to Cisco. I'm going to type this one in. It just got stuck. Cisco here on the 4-hour. An error occurred. There we go. Run. We're going to run this one again. Again, 47.21. I think it's at least a $50 stock. It's a nice jump. But do we have any kind of hope of this one? Look at how choppy it is. That's not a stock that I love, but I do think long term, I think you're going to get rewarded in this one. This is just a stock that got run up here in 2022, all the way up to 60 with hope that, oh my God, it's a great stock again. I will show you from a monthly standpoint. If we go back to monthly, look at how this one ran up in the 2000s. I mean, you're not even back up to where you were here at 70 or 80. So, but it's still moving, higher overall. It's just not as exciting for me. Nike is one that has a cross up. This is a beaten down stock. Do you want to time it? That's the question. Do you want to time this one? I don't think this one's a bad one to try and buy under $100. I think it gets back to 100. You're seeing a ton of gaps up here, including 121. It is a great, great stock. I don't wear their clothes. So do I buy it? No. I just don't, because I don't wear their clothes. That's the reason I don't buy it. So again, my point is you have to sign up for the newsletter. Sign up for the newsletter and you scroll down to the bottom. And all of these scans, I have them broken up. Most of the ones that come up at the top are in the core portfolio. Then there's a watch list. And then you can tune into YouTube live one day and see how I do it. Bitcoin and crypto, covered call ETFs, energy, leverage ETFs. I have all of them broken down by sector. And so this newsletter is free. You can sign up for the newsletter and just take a look at those stocks that are at the end, because that's where it's at. And if you don't want to take a look at those stocks, sign up for TrendSpider, because the 4-hour algorithm, which are those scans, that's all the scans that I use, I give you. So you can scan your own stocks. You can create your own watch list. You can even have in the morning an email showed up for you at 7:30 in the morning that says, hey, these are the stocks you should look at based on the 4-hour algorithm. Once you set up your watch lists and your scanners, it will email you a complete list. It is the most customizable and best platform out there that I have found. Is it better than TradingView? I think so. And the reason I think it's better than TradingView is because of the customer service. Anybody that's been with TrendSpider, they can tell you that this contact us button down here in the bottom right, it is unbelievable. You can ask them the dumbest question that you have. Hey, how do I insert a 5-day EMA or a 6-day SMA into my chart? Boom. They'll send you stuff. They respond back. They are fantastic with customer service. The benefit of signing up with me, you get this great deal of 50% off. Again, you get 6 months for free. And you get the 4-hour algorithm. You get the 65-minute algorithm. You get all of the custom watch lists. You get all of the custom scanners. Everything that I use, you get. And say you don't want that. It's too expensive for me. I don't know charting. Get yourself a free chart. Get yourself the Webull desktop software. Sign up for Webull and get the Webull desktop software. And then get Seeking Alpha Premium. Because then you're only paying $189. You save $50, 20% off your premium membership through my link. And then you can take a look at all the quants. So say you like Apple and you say, I want to see Apple and what its valuation and the fundamentals of Apple. And well, it's a valuation on F. Why is it a valuation on F? Let me go and look. Where's Apple? PE 28. What's the sector median? 22. And that's trailing 12 months. Forward, it's at 27. Sector median 23. Again, it's 16% above. The PE, it's a little bit below from a gap perspective. Now, the PEG, which is the big one, the forward PEG is 2.59. That's 35% above the sector median. Maybe you want to look at something else. So let's take a look. Ranked in industry, 10 out of 26. What's the number one? Oh, SMCI. What's the number two? Another holding of mine, Dell. So what do you want? Here is the number 3. Immersion, number 4. Fujifilm, number 5. They give you great opportunities. So again, how you're using these tools matters. I have these tool sets because they work for me. Maybe everything that I have doesn't work for you. Maybe it's a little bit expensive. But I would say Seeking Alpha Premium at $189, it gives you access to the quant and all of that analysis. TrendSpider, you can find a free trading program that you can use in order to learn charting. You don't need my 4-hour algorithm. It just provides you the ability to look at something without emotion. That's it. So if you have any questions, hit me up. That's it for today. I will be back tomorrow. Penny's going to get her shots. Thank you all. I will talk to you later tomorrow. Bye. Woo. Good morning, Mark. Good morning, Joe. Morning, Mike. Good morning, Chris. Morning, Daniel. Morning, Tyler. Cisco's, it is great between 47 and 52. It's I think past 50. Cisco's one. I like that gap at some point to get filled. But you're going to have to probably wait for that gap to get filled. I mean, that was just back in November. So it's not like it was a crazy long time ago that it was trading at 53. But I do like that gap to get filled. Morning, Larry. Oh, I don't know why she's crying. Okay, let me go. Dogs are crying. I will have everything out. My apologies for leaving early. I've got to get Penny shots if you missed it. Poor little puppy needs an allergy shot, and she needs a shot that she's actually very allergic to. So I need to go in the morning in order to get it. So if there's an emergency, I can take her back in the afternoon while they're open, rather than paying like $5,000 for an emergency room vet. So, okay, take care. See you guys. Bye.